One of the most under-discussed impacts of the US-Iran conflict is actually on the startup ecosystem, which is why I suspect a lot of startups would have to force shutdown if this war extends beyond a month. And I'll explain what all is happening behind closed doors. See, from the past month, since the received many DMs of founders being dodged by their investors, VCs, and capital providers. And that's when I realized that whether you are building in SaaS, EV mobility, AI, climate tech, or fintech, the global environment you raise money in might be about to get tougher. Because when uncertainty increases, be it about oil prices, trade routes, currency stability, or how long this conflict might last, investors become much more cautious with their capital. Instead of deploying money into high risk assets like startups, they start protecting liquidity. Money moves towards safer places like government bonds, gold, large profitable companies, or energy assets, which is why founders now need to focus on these three things. First, extend your runway. Cut unnecessary burn and make sure your company can survive longer without fresh capital. Second, prioritize revenue over pure growth. Investors during uncertain time prefer startups that show real demand and cash flow visibility. And third, diversify funding options. Apart from traditional VC, founders can explore venture debt, strategic investors, revenue based financing, and partnerships with large companies. Because in uncertain times, capital becomes more selective. So, if funding conversation suddenly feels slower, don't assume your startup is the problem. Sometimes the macro environment has just changed. I've added more insights in the caption. Share this with a founder who is currently looking to raise money.